Matt Winterle here. In this video, I'm going to present the real estate market predictions for 2022 and how they're going to impact home buyers and sellers in the coming year. I'm going to highlight 3 statistical drivers in the real estate market and what they're expected to do in 2022. Those being buyer demand, mortgage interest rates, or the cost to borrow money, and price appreciation, which is the increase in home prices. Each are going to impact buyers and sellers, so let's get into it. Starting off with the current state of the real estate market, and it has been booming, and it is booming right now, and shows no signs of slowing down. Since before the pandemic began in February and March of 2020, buyer demand has been increasing consistently, while at the same time, housing inventory hasn't been able to keep up. Looking at the following chart, which is the showing time showing index, and it reports data for more than 6 million property showings scheduled across the country each month. So it's essentially a gauge of how many buyers are looking at homes at a current time. And the latest index, which covered November showings, reveals that buyers are still very active in the market. Comparing this November's numbers to previous years, the graph shows that the index is even higher than last year and much higher than the 3 years prior to the pandemic. This means that buyers are going to have to be ready. If they don't already have, their ducks in a row and make sure they're pre-approved for a mortgage or have their, other type of financing all set prior to looking at homes, they're really going to be out of luck. With this increased competition, an offer to purchase won't really stand a chance of getting accepted if it's not backed up with a proof of financing, especially when there are competing offers on the table. So let's look at mortgage interest rates and where the experts are projecting they're going to go in the upcoming year. Looking at the following graph, you'll see that the experts are projecting that rates are going to increase from the current rate of about 3.2% up to 4%. While a lot of buyers were able to take advantage of rates in the 2% area around the past year or so, the forecasted rates of up to 4% are still really good and more in the range of what the interest rates looked like before the pandemic began. The following chart shows where interest rates were over the past 5 or 6 years. Looking closely, you can see that rates fluctuated from between around 3.5% to 4.5% for the 4 years leading up to the pandemic. So if rates increase back to the normal range, it's not going to be the end of the world. And, rates will actually be, what everybody thought of as good prior to the record lows that we just recently experienced. Now looking at price appreciation, as you can imagine, home prices have been increasing at record rates over the past 2 years on a national level, and even more so in Eastern Massachusetts. As you can see from this graph, which is on a national level, it's interesting to look at because it starts at the previous record highs of 10% appreciation, which is comparing January 2021 to January 2020 in the bottom left-hand corner of the graph. Looking closely, it appears that prices have peaked. However, it looks like they've maybe more so plateaued than peaked. Again, we have to look at these numbers and realize that they're on a national level. This map shows that appreciation year over year from 2020 to 2021. And as you can see, New England experienced the second highest rate of home price appreciation of any region in the country. And this geographic trend is expected to hold true in 2022. The experts predict that prices will continue to appreciate throughout 2022, but not at the crazy rate that they did in 2021. Again, these figures are on a national level and show an increase in prices from 2021 levels. However, some updated data, even from these figures, shows that these forecasters are starting to up these figures as January goes on. So what everybody has to understand is that this does not mean that prices are going to go down. It's just that prices are going to continue to go up, but from where they were last year, and they're not going to go up as an intense of a price appreciation rate as they did last year. So to wrap this up, this information is really important for home buyers because with the projected increase in mortgage interest rates, in addition to rising prices, the longer that you wait to buy your new home, the more it's going to cost you in the end. So it's best to get your finances in order as soon as possible and get aggressive by going out with your realtor and looking at properties so that you can make moves before interest rates and prices increase throughout the year. Why this is important for sellers is because an increase in mortgage interest rates, in addition to rising prices, means that the typical home buyer will have less purchasing power as the year goes on, and therefore will have more difficulty purchasing higher priced homes such as yours. Additionally, if you're planning on buying a new home once you sell yours, you're going to want to get your home on the market soon so that your next home doesn't cost you more as time goes on. There's a lot of information in this video, so if you have any questions about any of the material, or if you'd like to discuss how it directly impacts you as a home buyer and/or seller based on your unique situation, please reach out to me anytime, as I'd love to hear from you. Take care, and thanks for watching.